Hello, good morning, ladies and gentlemen. I'm excited to be here with you this morning. Hope you all had a wonderful weekend. So let's quickly confirm this. Let's get to this. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get the session started. I would like to see some feedbacks, please. If you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can get the session started. I would need some feedback, please. I want to see some comments, please. Okay, let's see what we have here. All right. Hey, Gatita, good morning. Thank you. Juamas, thank you very much. Another profit day. What a name. I like that. Good morning to you. Thank you. 435, good morning to you as well. Hey, Carrie, thank you very much. Thanks to have you around here. I really appreciate that. Hope you had a wonderful weekend. Another profit there again. Hi. I like your name anyways. All right, so I would like to take this as a positive feedback that we are good to go this morning. I'm so excited to welcome you all to yet another promising session on the X Trend Speed Live. My name, as usual, is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, since today is going to be the first trading day of the week, obviously we are going to be choosing random pairs, and don't be worried at all, as I've been able to get some, I think 4, 5, 6 financial instruments that we are going to be looking out for today, and definitely there are very interesting setups that we shall be taking advantage of during the week. And I would like to state here that this is the most appropriate time if you do have any financial instrument you want us to be looking at, be it cryptocurrency, currency pairs, commodity, options, whatever you have there, and you want us to look at this, please feel free to drop it in the comment section. And I assure you that this is going to be one of the pairs we are going to be monitoring for the week. So drop them in the comment section if you have any. And for those who are joining us for the first time, I'm so grateful you are around with us. You are welcome on board. Glad to have you around. And what we normally do here is to gather here as a community in anticipation of the New York session. So we analyze the market, find technical structures, find beautiful opportunities, then position ourselves in such a way that we can catch any trading opportunities lining up for us during the New York session. Well, at first it might look complicated. You might not understand how this works, but I assure you with time, you get to understand how this works, and you will definitely be able to take your individual independent decision using the information you have gathered here. So once again, thank you for being around. You're welcome on board. So with that being said, here, let's dive into the market and let's see what is really going on in the market right now. All right. The first thing we are going to be doing here, as usual, is to run through the economic calendar. Obviously, we need to know what is really going on from the fundamental perspective, as whatever technical structures we are able to identify here, we need some catalyst that will be driving price movement, and most of this catalyst comes in form of the fundamentals. So we want to see what fundamentals we have for the week and how we want to be anticipating this event, and how majority in the market are also anticipating this event will be reflected on the chart. So for the week here, based on the currency pairs that I already chose, we are going to be looking at events that will be affecting the dollar, the Japanese yen, and which other one? Okay, the pound sterling, I guess. This is what we are going to be looking at for the week. So what do we have right here on the economic calendar? We don't have any high impact event for today, so we shall be looking at I'm sorry, everyone. I had to sort out some personal issues here, but things are okay right now. All right. So, where are we? All right. So, we were looking at the macroeconomic events to look forward to for this week, and we've identified the first chairman is going to be testifying tomorrow, and it's going to be presenting the monetary policy report in front of the lawmakers tomorrow. So, we are going to be looking forward to that. This is a very high impact event. So we want to see how the stakeholders in this industry, in this economy, is going to be, how supportive they're going to be on the rate hike that the Fed is proposing. And this is going to be last for 2 days, because it's going to go on Wednesday too as well. Then we also have the ADP employment change, which also is another event we are going to be looking out for the US dollar. And if you look at what we have here, the previous data came in at 106,000, and we have a consensus of 195. That's quite impressive. So we have a positivity in the air for the ADP employment. So we are going to be looking forward to see the actual figure that will be coming in for the month. Then on that same day, we have the gross domestic product for quarter 4, and that will be affecting the Japanese yen. So we have 0.2%, which is the previous. Then we have a consensus of 0.2% as well. So we are going to be looking forward to see the actual figure, if it's going to be as expected, beyond expectation, or below expectation. But I think that is going to be as expected, as the consensus have indicated here. Then on Friday, we have the interest rate decision from the Bank of Japan, the monetary policy statement, then the press conference too as well, though a time frame is not yet identified here, but I'm sure this will be updated as the week runs by. Then on that same day, we have the almighty non-farm payroll, which is coming up on Friday. And look at what we have here. Remember, last month we had an astronomical figure of 517,000. And we have a consensus of minus 35,000 at this point. So we are going to be looking forward to that. I'm not sure figures will be coming in very positive this month on the NFP. So we are going to be looking forward to that one as well. Then we have the University of Michigan publication, and that is the Consumer Sentiment Index also, which is coming in on that same day. We have a data of 67. So we are looking forward to the consensus here, which is yet to be published. So these are the series of events we are going to be looking forward to for this week, and you would agree with me, we have quite a lot of events, and I'm of the opinion that this week is going to be a lot of volatility is going to be reflected on the chart for this week. And obviously what we want to be doing here is to anticipate this event, position ourselves in such a way that we can catch any trading opportunity lying up for us this week. So with that being said, here let's dive into the current chart. So the first thing we are going to be doing this morning, as usual, is the US oil. And looking at the US oil from an holistic point of view, we want to be scaling up into the daily time frame. Well, the US oil was one of our profitable trades for last week's trading session, as we were able to take advantage of the breakout retest of the $76 area, which was serving as our yardstick for trading activity for last week. And it was quite bullish as we saw price action move to the upside. And what we saw following that bullish momentum was a close at around the $80 level. Just right below the $80 level, we saw our price action closed around that area. And if you had been with us on the US oil for the last 6-7 months, you would know that the $80 level had also been a major key level within this current structure. So let's dive into what has been happening here in the last 7 to 8 months. And obviously you can see that it has been a bearish momentum since the month of June last year. And to further emphasize the strength of the sellers, we connect a series of lower highs, and we have this bearish trend line figure out. Now, if you look at the current structure and zoom into what has been happening since the last quarter of last year, you will see that price action has been doing some consolidation phase between the $83 level here and the $70 area. and this is obviously emphasizing the indecision in this market as price action continues to juxtapose between those prices. But another thing that I would like to let you know here, which I laid emphasis on last week, is the fact that we can see attempt by the buyers to break out of the structure, and this is evident since price action tested the $70 area here, where we started seeing some buy pressure resume around that area. And as you can see, price continued to find higher lows, and when we connect the series of higher lows here, we have a slightly slanted bullish trend line that you can see on your screen right now. And since that's the last time price tested the trend line was a couple of weeks ago, which led into the bullish momentum we saw last week, bringing price back into the $80 area. Now, going into the new week, will this bullish momentum continue to the upside? Well, this is something we need to also include the fundamental perspective on the USOil. Now, one of the things that economists are actually anticipating for this year is the Chinese economy, which just reversed their COVID policy restrictions. And obviously, we all know that the Chinese economy is the second largest importer of oil in the world, and it appears that they're beginning to rack in some demand for oil, and we're beginning to see that during the course of last week trading session. And one other thing that was also indicated last week was that we have a 102 million barrel per day production demand for oil, which is very, very high at this particular point in time. So it shows that the demand for oil is increasing across the globe as countries like India, China, and other countries across the Asian Pacific region has been racking up the increase for oil so far this year. And I hope that we have the opinion that we might likely be seeing this reflect on the chart as a bullish momentum. But when that is going to start is what we don't know at this point. But in order to have a better dissection of what is really going on here, we need to scale down to a much lower time frame to see how price action is reacting to that $80 level area since the beginning of this week to decide if we are going to be buying the US oil for this week or getting ready to join another wave of bearish momentum to the downside. So in that regard, permit me to scale down to a much lower time frame here, and that was going to be the should we go into the 4 hours time frame first? Let's go into the 4 hours time frame so that we can see what has been happening on this chart in the last couple of weeks. Now, on the 4 hours time frame, this is where it's the most important structure here, which is what has been happening here since the mid-month of February. And since the mid-month of February, we saw a situation where selling pressure resumed around the $80 level, and this led into a situation where price continued to find lower highs. And when we connected the series of lower highs here, what did we find? We saw our price action. We had a bearish trend line. And one thing that happened prior to last week's trading session, we saw the breakout of that trend line to signal that the trend line may no longer have the capacity to continue to hold that bullish momentum. And with the breakout retest of that trend line here, we were lucky enough to be part of this bullish momentum last week as we rode the move all the way up into the $80 area. And if you look at what has been happening here during the course of last week, you'll see how price action had consistently found higher lows, and as a result of that, we also have a bullish trend line to support that bullish momentum there. Now, if we zoom into the current structure here, we all acknowledge the fact that price action closed just right below the $80 level last week. And one thing we have noticed at the beginning of the week is the fact that price resumed with a bearish gap here. And what this simply means is that there has been some profit-taking activities going on in this market right now, and we might likely be seeing a retracement phase anytime soon. Since we have a bullish momentum here, price might likely retrace back into the structure at the $77.50 level in anticipation of another wave of bullish momentum. And if it so happens that price action breaks down the $77.50 level, definitely we shall be looking out for more opportunities to join that decline to the downside. But the most important thing right now is to scale down to a much lower time frame. Let's see how price action has been reacting since we witnessed that bearish gap at the beginning of the week. And in order to have a better perspective into that, we want to be scaling down into a much more lower time frame, which is the 1 hour time frame. Now look at what I found here on the 1 hour time frame. So we have the structure figured out here. So this is how the week has started. The week started on a bearish note. As you can see, price action started at around the $79.50 level, and then price moved into the $79 area where we saw some buy pressure trying to push price to the upside. Price action came back into the $79.40 level again to give us a resistant line for this week. So this is the highest point price has ever been for this week. Now we have a support level sitting around here, and what I did is to identify this channel, and you all know what we look out for whenever we sight this kind of channel. We either wait for a breakout of the channel for buying opportunity, or wait for the breakdown of the channel for selling opportunity. And if you had positioned yourself below the structure, you will definitely have had your position triggered at this point, because I already have a sell stop order right below the structure, and it appears price action has triggered that position at this point. Well, if you had missed out on that opportunity, let's see if the market will be giving us another chance to join that decline. Well, if we look at the structure here, since the breakdown happened, I will be advising us to scale down to a much lower time frame to look out for retest of structures to happen, where we start seeing rejection of this level on our lower time frame to give us further confirmation to join that decline to the downside. So in that regard, I will scale down to the 50 minutes time frame to see if we can. Okay, we already have this, so we want to see price action do some rejection of the structure to give us a confirmation to join that decline to the downside. So if you had missed that opportunity, I would advise you to remain patient here and wait for price action to do some retest of the structure to further confirm that this bearish momentum is going to the downside. And if you had joined this move, well done to you for being on standby to catch that move, and let's see how far this momentum is going to go. So with a stop loss sitting somewhere right above the $79.40 level, that will be giving us about 65 pips stop loss here, and then we should be having our take profit target at let's go back to the 1 hour time frame to look for take profit target area. So on the 1 hour time frame, let's allow the take profit target area to fall within this $76 area, at least in the meantime. And remember what I told you about the $77.50 level. I told you that if price action comes within the $77.50 level, we want to see how price action will be reacting to that structure to decide if we are going to be adding more position to our existing trade, or we might be getting ready for another wave of bullish momentum. So this is what we want to see here. Breakdown, retest of the $79 level, price action continues to the downside, gets into the bullish trend line here, and if we start seeing buy pressure resume above the $77.50 level, then this will be an opportunity to join another wave of bullish momentum. However, if price action breaks down the $77.50 level, selling pressure below both structure, it will be an opportunity to add more position to our existing trade. So let's see how price action will be playing out in the next couple of hours. Now, to further guide our trading activity for today, and to further emphasize the bearish momentum we are noticing here at the beginning of the week, I would like to connect a series of lower highs here so that we can have a trend line that we can use to guide trading activity for this week. So what this simply means is that if price action continues to trade below this bearish trend line, we shall feel comfortable in our sell position. So this is what we have here. So we want to be seeing something like this: price drop, respects this trend line, then continue to draw to the downside. This is what we want to be seeing to feel comfortable in this sell position on the US oil. Now, what happens if price action breaks out of that trend line? That is, it takes out all our buy positions here, breaks above that structure. Then if this happens, then we might likely be seeing some buy pressure above this structure to give us an opportunity to join the trend continuation to the upside. So these are my views here on the US oil. So in as much as we're holding on to a bearish bias, which is more or less a counter trend opportunity at this point, we should keep the option of buying above the $79.40 level or the bearish trend line open, just in case we have a breakout of the structures. So these are my views on the US oil. If you do have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next option right now, and that is the US tech. So on the US tech, the first thing we are going to be doing is to scale up into the daily time frame so that we can have an holistic view of what is going on in this market. So throughout the course of last year's trading session, we have observed that the US tech has been very bearish, and to further emphasize the strength of the sellers, here, we connected the series of lower highs to give us that beautiful bearish trend line that you can see on your screen. Now, things got a little bit interesting in the month of July when we started seeing buyers negating all attempt by the sellers to break down of that $11,000 area. And what this simply means is that the $11,000 mark was seen as cheap enough for the US tech to be bought. And you can see every time price action comes within that level, we saw rejection from the buyers, which lasted about 6 months before we finally saw the breakout of that level here during the first month of this year, leading to a final breakout of that bearish trend line to emphasize the fact that the trend line is no longer strong to hold selling pressure. Now, since the beginning of the year, I would like to zoom into what has been happening here since the beginning of the year. The year started with buying pressure, breaking out of the $11,000 area and continuing to find higher lows and higher highs. And to further emphasize the strength of the buyers here, when we connect the series of higher lows, you can see that we have a bullish trend line. And something happened here 3 weeks ago on the US tech. We finally saw the breakdown of that bullish trend line for the first time this year to signal a bearish momentum in this market. Now, to further buttress this reversal structure around this area, we were able to identify a reversal pattern in the form of a double top structure, as you can see here, where the $12,300 level was serving as a neckline of that reversal pattern. And a couple of weeks ago, we saw the breakdown of that neckline area to give us a confirmed and mature reversal pattern. And from a technical standpoint, whenever we do have this kind of breakdown of structure, we expect that one point in time price is likely going to come back to do a retest of that level to incite another wave of bearish momentum. And what we saw here during the course of last week's trading session, we saw bullish momentum reject the $12,000 area and culminating with an engulfing candle on the last trading day of last week. Now, price is back at the $12,300 level, which is also the neckline of that reversal pattern we identified earlier. Now, the question for the week now is, how are we going to be selling or buying the US tech? And to answer that question, we need to see how participants in this market will be reacting to that neckline area at the 12,300 to decide what our next line of action will be. Now, there are two things that could happen from here. One, we could have selling pressure resume below the 12,300 to incite another bearish momentum to the downside. That is one scenario we are going to be looking at on our lower time frame. Then another possible situation that could happen here is a breach of the 12,300, price breaking above that structure by pressure resumes to bring price back into 12,009. And if a buy pressure resumes above the 12,300, we'll definitely want to be having our TP target at least in the meantime at the 12,900, which also shares a confluence with the bullish trend line that was broken 3 weeks ago. So these are the things we are going to be looking forward to. So let's scale down to the lower time frame to see how participants in this market has been reacting to the $12,300 level since the beginning of this week. Now, when we scale down to the 1 hour time frame, this is what I was able to identify here at the beginning of the week. So this is what we saw here. We've been witnessing a bullish momentum since last week, the later part of last week. And at the beginning of the week, we can see here that price action appeared to have been trapped between the $12,350 and the $12,260 area. And remember, we identified the neckline of that reversal pattern on our daily time frame at the 12,300, which I will be approximating to the 12,350 level, which is currently serving as the resistance point for this week. So with the resistance point for this week here, resumption of selling pressure around this area, we might likely see a situation where price would want to respect that reversal pattern we identified on the daily time frame to incite a bearish momentum. And if that is going to be the case, we want to see price action do a breakdown retest of the $12,260 level. Okay, hold on a second. Let's label this for the sake of clarity. And then I always like to keep our options open by identifying a possible breakout of the 12,350 for a trend continuation to the upside here. So we also have by the breakout retest of that structure. Okay. All right, so here we go. So now, if this sell pressure we have been witnessing here at around the 12,350 continues, we want to see a breakdown retest of the 12,260 to trigger our sell position in this market, with a take profit target sitting somewhere around the $12,000 level, where we want to look forward to see how price action will be reacting to that structure to determine if we are going to be adding more sell position or getting ready to join a bullish momentum at that point. Now, in addition to this channel here, we need to take into consideration the bullish momentum that started last week. And if we bring out our line chart and connect a series of higher lows, we should be having a bullish trend line to guide trading activity for today. So this is more or less a structure that will make things easy for the eyes to see trading activity clearly. So we have a trend line here, which has been guiding bullish momentum since the later part of last week. So we want to see if price action continues to trade above that bullish trend line, then definitely this is going to be an opportunity for us to buy the US tech. But to buy the US tech at this current structure, I want to see price action break out of the 12,350 level, and if possible a retest of structure, buying pressure above the 12,350, then we can join that rally to the upside. So that is the only way we are going to be buying the US tech for today. We need to see a breakout of the 12,350. You can as well place your buy stop order above the 12,350 so that you can position yourself to catch that move, then your stop loss to be somewhere right below the 12,260 area. However, if price action breaks down that bullish trend line, then that will be a sign that the trend line may no longer be strong enough to hold that bullish momentum. So if a breakdown of the trend line happens, we want to see a breakdown of that support line for the week, which I said is sitting at the 12,260. If that happens, we have a sell stop order below that structure, which will be triggering that position. Then you should be having a stop loss sitting above the 12,350, as we might likely see a situation where price will do some retest of structure. It could be the retest of a 12,260 or the bullish trend line here, where selling pressure below the structure will further emphasize the strength of the sellers at this point. And if price action continues to the downside, breaking down the 12,200 level, we want to be adding more position to our existing trade. So these are my views here on the US tech for today. If you do have any questions, feel free to drop your inquiries in the comment section. As usual, I'm here to help you out or shed more light in whatever aspects that you really don't understand. So that is that on the US tech. So I will be moving on to the next pair. And the next pair that we are going to be monitoring for this week is the GBPUSD. And on the GBPUSD, we also want to be looking at things from the daily time frame here. And for the sake of this, let's look at what has been happening here since in the last 4 to 5 months. Now look at the structure we have here, that is since the month of September. You can see our price action had consistently find higher lows, and if we connect the series of higher lows here, we have a bullish trend line which further emphasizes the strength of the buyers in this market. Now something interesting happened as soon as price got into the 1.24500 level. That was in the month of December. We started seeing selling pressure resume from that structure. The same thing also happened here between the month of January till the first week of the month of February. We started seeing selling pressure resume again around that area, and this led to the first breakdown of that bullish trend line. This is the first time the bullish trend line was broken in the last 4 months, and this is a beautiful signal that there is likelihood that price action might drop to the downside. Now if we look at what has been happening here since the beginning of the year started at the 1.18500. As you can see here, bullish momentum began respecting that bullish trend line, and price action moved significantly to the upside. And if you look at what has been happening here in the last 3 to 4 weeks, you will see that price is back into that region where it started the year. And one thing you will observe is that as soon as price got into that area, we are beginning to see some buy pressure resume around that area to further emphasize the strength of the buyers. And if you look at that structure, you will see that that level has a strong buying memory which has lasted over 4 to 5 months here, giving us a clue of how strong that area is for the buyers in this particular market. Now with price action trading above the 1900 and the fact that we saw the breakdown of the bearish trend line here, you will agree with me that we are at a critical point in this market, as we need to be very careful. As you can see, if we connect the series of lower highs here in the last couple of months, you will see that we also have a bearish trend line which has been guiding this bearish momentum to the downside. Now for us to sell the GBPUSD, looking at it from an holistic point of view here, we would want to see price action break down that demand zone, selling pressure below the structure to give us a further confirmation that sellers are very strong in this market. But as long as price remain above the 1019, the possibilities of buyers coming in this market is still very possible. And another thing I would like to show you here to further buttress the a possible reversal pattern here, that is selling pressure here. If we look at what has been happening here in the last 3 months, you will see that we can see price action transitioned into something that looks like a reversal pattern in the form of a double top structure. Price was unable to break the previous high. In fact, price was not able to sit comfortable around the 1.24500 level when it got to that point, and the 1.19 area, which is serving as a strong demand zone in the past, appears to be the neckline of that reversal pattern. So for this reversal pattern to be mature, we need price action to break down that structure to the downside, selling pressure below this level on our lower time frame to give us that leverage to join that decline to the downside. Now going into the new week now, are we going to see this happen? Are we going to see a breakdown of the structure to signal the beginning of another wave of sell-off in this market? That is one thing we are going to be looking at on the lower time frame. Then another thing that could happen here, if the buy pressure here continues, then we might likely see price action break out of that bullish trend, that bearish trend line here, which has been guiding selling pressure since the last 1 month. Buy pressure above that structure to give us an opportunity to buy. So these are the things we are going to be looking forward to. So let's scale down to the lower time frame. Let's see how participants in this market has been reacting to the 1.200 level, after which we shall be making a decision for this week. So scaling down into the, let's scale down to the 4 hours time frame first. Let's scale down to the 4 hours time frame first of all. And on the 4 hours time frame, this is what we found here. And as you can see, remember we identified that demand zone, And if we zoom out a little further into what has been happening here since in the last couple of months, you will see that price action has been bearish. And to further emphasize this, we have an ascending channel to emphasize the strength of the sellers here. So if we connect the series of lower highs, as you can see, we have the resistance line for the ascending channel. Then if we connect the lower lows, we have the support line for the ascending channel. Now, if you look at the last time price action tested the support line of that descending channel, this is what we have here. We have the last touch here, and price is unable to come back and test the resistance line of this ascending channel. As you can see, the 1.191 level continue to negate all attempt by the buyer or by the sellers to push price to the downside. And as long as price remain above this level, it is very, very likely that bullish momentum could come in at this point. Now, if we look at how the week closed last week, we saw price action close at around the 1.20500 level, a very strong psychological area since in the last 4 to 5 weeks, a very strong psychological level. And now we want to see how price action has been reacting to the structure since the beginning of this week to decide what our next line of action will be. Now, if we scale down to a much lower time frame like the 1 hour time frame, we begin to see things more clearly. Now, on the 1 hour time frame, this is what I was able to identify here at the beginning of the week. Now, at first, there was a consolidation phase showing some level of indecision in this market as price action continued to range within the 1.20500 level and the 1.20250 area. And you all know what we look out for whenever we do have this kind of flat channel. We wait for either a breakout of the channel to give us buy opportunity above the structure, or a breakdown of the channel at the 1.20250 to give us selling opportunities. And if you look at what has been happening here in the last 30 minutes, price action appears to have broken down that structure, triggering the sell stop order sitting below this level. So if you took advantage of this opportunity, well done to you for being on standby to catch that move and ensure that your stop loss is somewhere right. Hold on a second. If we have this, our stop loss should be somewhere right above the 1.20500, which will be giving us about 25 pips stop loss on this one. Then take profit target shall remain within the demand zone here at the 1.19 area, where we look forward to a breakdown of that structure to confirm the reversal pattern we identified on the daily time frame. Now, with the way things are right now, price action has broken down the 1.20250 level, and it appears this is going to be going to the downside. Let's hope so. And for those who had missed out of this opportunity, well, there's still a likelihood that we could have a retest of that structure that was broken. You all know that from a technical standpoint, whenever we have a breakdown of structure, we expect that price action coming back to retest the structure at one point is very likely in this market. And if it does that, we want to be anticipating another opportunity to join that decline to the downside if we start seeing retest or rejection of that level on our lower time frame. Now, if price action continues to the downside in such a way that, hold on a second, in such a way that it breaks down the 1.200 level, another psychological level there, then we want to be adding more position to our existing trade. And if a breakdown of that structure happen, it will also share a confluence with this bullish trend line that we identified here last week. So a breakdown of both the bullish trend line and the 1.200 level will be welcoming additional position. Now, for those who already joined this decline to the downside, please, if price action gets into the 1.20 area, kindly move your stop loss accordingly to secure this current position as we wait out for another opportunity to join. Now, if price action gets into the 1.20 level and we start seeing buy pressure around this area, that is, price finds it difficult to break down the 1.200 level, then we might be anticipating a buy position at the retest of that structure. But if that happens as well, I would suggest that we don't buy at that point. Please don't buy at the 1.20 level. That is, if price action drops into the structure and we start seeing buy pressure, please don't buy at that level, as we want to see how price action will be reacting to 1.20250, because we could have a situation where price will just come break down the 1.20250, come back into this area, retest this, and boom, go to the downside. So this is a very possible setup that could happen from this area. So that is why I'm suggesting that we don't buy yet and wait for price action to break out of the 1.20500 level to do the buying at this point. I hope I made myself clear here. And if at any point in time price action climbs above the 1.200 level, that is, takes us out of our sell positions here and climb to the upside, breaking out of the 1.20500, we shall be getting ready to buy the GBPUSD. So let's keep this in mind as we keep on monitoring the current price action. If you have questions, please feel free to drop your inquiries in the comment section. So the next pair we are going to be looking at today is the XAUUSD. And in fact, if you recall, the XAUUSD was the most profitable trade for us last week, as we were able to scoop over 7,000 pips in profit after having multiple entries on this commodity. Now that we are going into the new week, what is going to be our plans? What are our expectations on the XAUUSD for this week? Well, if you look at the daily time frame here, it is quite obvious that price action has been bullish in the last 4 to 5 months. And to further emphasize the strength of the buyers in this market after connecting the series of higher lows, we have a couple of trend line here. We have one here which I call the temporary trend line, and this one here I call the major bullish trend line, as you can see here. Now if we zoom into how the new year started, that is the year 2023, how it started, we saw how price action broke out of key structures around the 1,800 and the 1,820, and we saw how bullish momentum began from the structure pushing price to the upside. Now following the rejection of the 1,950 level, we saw another crash back into where price action started the year, and since price action came back into this level, we saw some rejection of the structure, giving us some bullish momentum, which we were lucky enough to take advantage of last week, which gave us over 7,000 pips in profit. And once again, congratulations to everyone who took advantage of that opportunity. Now we are at a critical point in the market right now, and that is the 1,860, as we saw a sharp rejection of that structure here. Now to further emphasize the importance of the 1,860, I want us to look a little bit to the left hand side, as during the first week of the month of January, we saw how this level was a selling niche at one point before the breakout of that structure happened here. And if we fast forward into the first week of the month of February as well, we saw some buy pressure resume around this area before the breakdown retest of the structure happened. Now we can see we had selling pressure here, we had selling pressure here. Now as price action is back at the 1,860, will there be a sell pressure resume again from the structure? That is one thing we are going to be asking ourselves, and we want to be dissecting what is really going on around here. But before we scale down into a much lower time frame to see what is really going on around the 1,860, I would like to let you know one other thing around this current structure. Now if we look at the major bullish trend line here, we saw a couple of weeks ago how price action broke down that trend line. Is this breakdown a false breakdown or a true breakdown? The only way we will know is how price action reacts to the retest of the trend line here will determine if this breakdown is a false one. So if it's a true breakdown, this is what we want to be seeing during the new week. We want to see price action come back to do a retest of the structure, which also shares a confluence with the 1,860. We start seeing selling pressure resume below this level on our lower time frame. Then it is at this point that this structure will be a confirmed breakdown in this market, and we might likely be seeing price drop further to the downside. So this is what we are going to be looking forward to sell the XAUUSD today. But if price action climbs above the 1,860, climbing above that bullish trend line, and buy pressure resumes above the structure on our lower time frame, it will be a beautiful opportunity to join a rally to the upside. Now with this information we have gathered here on the daily time frame, I would like us to scale down to a much lower time frame like the 1 hour time frame to see our participants in this market will be reacting to the 1860, which I said shares a confluence with that major bullish trend line we identified earlier. So in that regard, we shall be scaling down into the 1 hour time frame so that we can see how participants in this market has been reacting to that 1860 level since the beginning of this week. Now at the beginning of the week, this is what I was able to identify here. If we look at the 4 hours time frame, first of all, I saw an ascending channel here, which happened after price action broke out of that bearish trend line that we identified last week. Remember, that was the bearish trend line we identified last week, and it was upon this platform that we started buying the XAUUSD for last week. And look at the structure here. We have an ascending channel to further emphasize the strength of the buyers. Now, price action was unable to test the 1860 when we scaled down to a much lower time frame to see what is really going on here. And remember how the 1860 level has been a strong selling niche in the past. Now, with price not able to get into that structure, we might likely be seeing this as a potential retracement in this market, and this might likely lead into a situation where price will drop further to the downside. But another thing that I was able to identify here, which I need to call our attention to, is the reversal pattern sitting on the demand zone here. And that reversal pattern is coming in the form of a head and shoulder pattern. As you can see, we have the head here, we have the right shoulder here, then we have the neckline of that reversal pattern sitting at the 1845. And during the later part of last week's trading session, we saw the breakout of that neckline area, which was a beautiful signal that the reversal pattern around this point is now mature. Now, whenever we have a breakout of a trend line, of a neckline of a reversal pattern like this, we expect that one point price might likely come back to do a retest of that structure to incite another wave of bullish momentum to the upside. Now, if we are going to be taking advantage of this one, well, definitely we want to sit at around the neckline area here, which also shares a confluence with the support line of the ascending channel, where if we start seeing buy pressure resume around this area on our lower time frame, then we shall be anticipating a trend continuation to the upside. But if price action breaks down that neckline area, dropping below the bearish trend line we identified here, selling pressure below the structure will definitely be welcoming a sell position at this point. So in that regard, before we go into the details here, let's scale down to the 1 hour time frame. Let's see how participants in this market has been reacting to this current structure right above that trend line that I identified here to decide what our next line of action will be. Now, when we scale down to the 1 hour time frame, things become a little bit clearer here. As you can see, since the beginning of this week, price has been consolidating between the 1857 and the $1,850 area to emphasize the indecision in this market. And you all know whenever we have this kind of indecision in this market is more or less as might be low liquidity in the market. That is, major players in this market are stepping aside to watch how the price is going to be reacting to the the fundamentals for this week. And you all know this week is laced with quite a lot of fundamentals. We have the NFP coming up, we have the consumer price index coming in for this week. Then we also have the presentation of the Fed's chairman to the lawmakers, his MPR, his monetary policy report to the MPR. So we are going to be seeing how these are going to be, our participants or our price action will be anticipating this event. Now, with the consolidation phase we have here, definitely we want to be looking forward to either a breakout or breakdown of this channel to give us an opportunity. Now, if we consider the bullish momentum that has been happening in this market since the beginning of last week, we might be tending towards a bullish momentum if price action ever breaks out of the 1857. So with a buy stop order sitting above the 1857 level, we want to be buying the XAUUSD. However, if price action breaks down the 1,850, a sell stop order is right below the structure. We look out for selling opportunities. If that happens, trigger our position. And if price action continues to the downside, I have told you how important the 1,845 level is, which appears to be the neckline of the reversal pattern we identified on the higher time frame. So what this simply means is that as soon as price gets into that structure, we want to be securing the current sell position by moving our stop loss accordingly to secure that position. As we wait out and see how price action will be reacting to this neckline area to decide if we are going to be adding more position to our existing trade. Now, if bullish momentum resumes here, then I want to be seeing this as a confirmation that the reversal pattern that we identified earlier has become valid. Then we want to be joining a trend continuation to the upside. But if it so happens that price action breaks down that neckline area, then at this point, selling pressure below this level will be welcoming a sell position in this regard. So we want to be adding more position at the breakdown of the 1,845 level. So these are my views here on the XAUUSD for today. So let's see how price action plays out for in the next 24 hours, and we shall be coming here tomorrow to review this market. If you have any questions, feel free to drop your inquiries in the comment section. I can see your comments, Team Ruler. Thank you. Trust you having a wonderful day at work. And how was your weekend? All right. So let me see if I can squeeze one more pair into the last 4 minutes I have right now. Let's see if I can do that quickly. So let's look at the USDJPY for this week. Okay, so we have the USDJPY on our watch list now for this week, and look at what we have on the USDJPY. So I will be running quickly through the current market setup on the daily time frame. And obviously, if you look at what has been happening here in the last 4 months, it has been bearish. But with a breakout of that bearish trend line here a couple of weeks ago, we are still thinking if this bullish momentum will continue to the upside. Now, throughout the course of last week's trading session, we really didn't have any significant price movement as price action kept on consolidating within the 136.00 level. Now, with the situation we have here, if price action climbs above the 136.00 area, I will definitely be looking out for buying opportunities. And one thing we should also take into consideration is the fact that price action breaking out of that bearish trend line needs some retest of structure from a technical standpoint to further confirm that the breakout is valid. So we might likely see a situation where price might drop to the downside before another wave of bullish momentum will start in this market. So that is another possibility we are going to be looking forward to. So what this simply means is that if selling pressure continues below the 136 level, we might likely see a counter trend opportunity to bring price back into the resistance point of that trend line before another wave of bullish momentum will happen. But if bullish momentum starts above the 136 level, that is, price climbs above that climbs above the 136 level here by pressure above the structure, we might likely see a transition into a trend continuation pattern. So let's scale down to the lower time frame. Let's see how participant in this market has been reacting to the current market structure to decide what our next line of action will be. Now, if we scale down to the 4 hours time frame, is there something I would like to show you here? Let's see. Okay, I think we talked about this last week on the USDJPY, that we noticed that it has been bullish throughout the month of February. And to further emphasize the strength of the buyers in this market, we have a beautiful ascending channel. And if we look at the ascending channel here, I was able to demarcate the upper part from the lower part with some couple of trend line here. And if you look at what has been happening the last couple of weeks, you will see how price action has been trading above this trend line, which emphasizes that buyers are still very, very strong in this market. So if price action continues to find bullish momentum right above the structure, we would have no choice than to look out for buying opportunity in this market. However, if a breakdown of that structure happens, then we might likely see price do some retracement into the support line of that ascending channel, probably around the 135.00 level before another wave of bullish momentum happen. And if a breakdown happens, then we might likely be seeing a sell-off in this market. So these are the things we shall be looking forward to. But in order to make a decision here, we want to see how price action is reacting to the structure here since the beginning of the week to decide if we are going to be buying or selling the USDJPY. And we should also take into consideration the huge demand zone that we have been noticing here, as you can see, since on the 24th of February, since the breakout of that structure, buyers have been negating all attempt by the sellers to break down that level. Now, if buying pressure continues above this level, then we'll have no choice than to look out for buying opportunity. The only way we want to be selling the USDJPY this week is if price action breaks down the 135.800, selling pressure resumes below that structure on our lower time frame, then we could join that decline to the downside. Now, with this information we have had here on the 4 hours time frame, let's scale down to the 1 hour time frame to see how participants in this market has been reacting to the structure, after which we are going to be making a decision for today. Now, when we scale down to the 1 hour time frame, this is what I was able to identify on the 1 hour time frame. Now, look at the structure we have here. Remember, we are sitting right on a strong demand zone. Remember, then at the beginning of the week started on the bullish note. This is where price action ended last week at the 135.800. So we saw some bullish momentum begin this week. Then we had rejection here. Sellers rejected all attempt by the buyers to break out of that structure, bringing price back into that support line. Then we saw the breakdown retest of the support line to the downside. I actually took advantage of some selling positions here, but I was quickly taken out of the sell position as we saw a new higher low. Now, one thing about this current structure is this. If we look at the breakdown of that support line at the 135.800 level, you will see that it appears price action has transitioned into a reversal pattern. Let me show you how that is. If we follow this impulsive move to the downside, we saw a sharp rejection of the 135.350, which is sitting within that strong demand zone we identified on the daily time frame. Remember, then we saw price come back into the support line here, which we identified here. Price was unable to break the previous low. By pressure around this area, price comes back into the structure. So what do you see right now? You see a reversal pattern in the form of a double bottom structure. And for this reversal pattern to be mature, definitely we want to see price action break out of the neckline area of that reversal pattern, which sits at the 135.800 area. And what have we seen in the last couple of hours? We have seen a breakout of that structure here. If you have been part of this one, if you are taking advantage of that move right here, kudos to you for being on standby to have got that move. However, there is still a possibility that price action could come back to do a retest of the structure by pressure above this level to inside that bullish momentum to the upside. So if you had missed that opportunity at the breakout of the 135.800 level, we could still have a situation where price will drop back into the area to inside another wave of bullish momentum. So with this situation here, whatever position you have taken here, if you are taking the position here, ensure your stop loss is right below the previous low here to secure this current position, as we want to see if price will be dropping back into this area. Now, if price does not come back into the 135.800 level, then remember that we have a resistance point for the week sitting at the 136.00 area, where a breakout retest of that structure will be a beautiful opportunity to join that rally to the upside. In fact, you could have a buy stop order above the 136.00 level at this point, and if you want to do that, ensure you can afford to have a stop loss that will be at around this area, which is about 60 pips. If you can afford to have a stop loss around that area, I think okay, you can take advantage of that move around that area. Now let's see what happens if we zoom out into the current structure here, and which will also help us to guide our trading activity during the New York session today. Now look at this structure here since Thursday of last week. You can see that price action has been bearish, and if we connect the series of lower highs here, what do you see? We have a bearish trend line, which has been guiding the selling pressure since last week. So what happens if price action breaks out of the 136.00 level? It would have broken out of that bearish trend line as well, and if that happens, then that will be a signal that the trend line is no longer strong enough to hold bearish momentum. And if that happens, a breakout retest above the structure will be a beautiful opportunity to join that trend continuation to the upside. So on the USDJPY, as long as price remain above the 135.800 level, which happens to be the neckline of that reversal pattern we have here, we shall remain comfortable in our buy position. And if price action breakout reaches the 136.00 level, like I said earlier, we want to be adding more position to our existing trade. So that is what we are going to be doing for today on the USDJPY. So I'm hoping that price action will continue to the upside, and don't forget that price action is sitting on a strong demand zone here. So as long as price action remains above this level, we'll continue to look out for buying opportunity. So I hope I made myself clear on the USDJPY. You can also munch my screen and use it as a reference point when you're about to make your individual decision for today. So with that being said, here I'm already out of time, but for the sake of those who are not part of the beginning of the live session, let's quickly do a quick recap of what we talked about today. So the first commodity we talked about today is the US oil, and on the US oil we were able to identify a simple setup here. We already have a sell stop triggered at the breakdown of the $79 level. And I have said here that for those who had missed out on this breakdown here, let's remain patient. We are likely going to have a situation where price will come back to do a retest of the structure or the bearish trend line in anticipation of another wave of bearish momentum to the downside. So let's be on standby for that. And to further make things easy for us during the New York session today, we have a bearish trend line to emphasize the strength of the sellers. So as long as price remain below that trend line, we want to feel comfortable in our sell position. But if at any point in time price action breaks out of that trend line, then we might likely be seeing a momentum shift gradually coming in. And if a retest of structure happens followed by buying pressure above this level, then we want to be thinking of buying the US oil. A further breakout of the $79.40 area will welcome additional position around this area. Then if price action continues to the upside, breaking out of the $80 level, we want to be adding more position to our existing trade here. So these are my views on the US oil. I wish you best of luck on that one. Then we went on to talk about the US tech for today. We also have a simple channel here. Price has been consolidating since the beginning of the week. So right now we are holding on, waiting for a signal to happen at this point. And to further guide our trading activity for today, we have this bullish trend line figured out after connecting the series of high and low. So for us to feel comfortable in a buy position here, we want to see price action remain above that bullish trend line. So I've told you that we have a buy stop order sitting around the 12,350 level with the hopes that price action will break out of the 12,350 to buy pressure above this level. Then we shall be joining that rally to the upside. Then a further breakout of the 12,400 will definitely welcome additional position to our buy trade. However, if price action breaks down the bullish trend line, then that will be the first time the trend line has been broken in the last 4 days. And if that happens, we want to be seeing that as a bearish signal. And if it so happens that price action breaks down to 12,260, we want to be having our sell stop order here to trigger that sell position around that area. Now, if you have your sell stop order below the 12,260, you have your stop loss right above the 12,350 area, as we could have a situation where price might likely come back to do a retest of the trend line in anticipation of another wave to the downside. So this is how we want to be positioning ourselves against the New York session. Then we went on to talk about the GBPUSD, and on the GBPUSD, like I said earlier, we already have a sell position triggered as price action broke down the support level for this week. Remember, we have a buy stop order above the 1.20500 level. You don't need to delete it. We might likely have a situation where price will climb up, take us out of the sell position and trigger that buy position. So let's have that also open as well. And for those who had missed out on this breakdown of this trend line of this 1.20250 level, let's remain patient. We might likely have price action come back to do a retest of structure before another wave of bearish momentum happen. And if that does not happen, well, you want to sit below the 1.200 level in anticipation of the breakdown of that structure, I will be welcoming additional position to our existing trade. Then we went on to talk about the XAUUSD for today, and on the XAUUSD, alright, we already have our sell stop order triggered right now as price action breaks down to 1,850. So I told you our stop loss should be somewhere around here. I hope you can afford that. Have your stop loss above that area as we continue to monitor price action. And one thing about this current structure, I told you, please remember the importance of the 1,845 level, which we identified on the 4 hours time frame. Remember, is the neckline of the reversal pattern we identified on the 4 hours time frame. So as soon as price gets into that structure, we want to be moving our stop loss accordingly to secure this current position, as we don't know how price action will be reacting to that level. So if it happens that price action drops below the neckline area, selling pressure resumes below that level, then we want to be joining that decline to the downside, adding more position to our existing trade. However, if price finds it difficult to break down the neckline at the 1,845 and buy pressure resumes above that area, then we want to be getting ready for another wave of bullish momentum in this market. So let's keep all this perspective in mind. Screenshot my screen just in case you need it as a reference point when you're about to make your individual decision. Then we went on to close the day with the USDJPY, and on the USDJPY, I have told you that price action is sitting on a fat demand zone here, a huge demand zone which has a strong memory for buying power. And coupled with this, we have a reversal pattern identified a couple of hours ago here with a neckline sitting around the 135.800. Let me show you again for those who are not part of the live session when we were talking about this. We saw the low here at the 135.370. Price action came into the 135.800 and you saw price tested the 135.500. Price was unable to break the previous low, comes back into the structure, giving us a double bottom structure, which from a technical standpoint is a strong reversal pattern. And whenever we have this kind of structure, the next thing we want to be doing is to have a neckline which shall be guiding our trading activity. And right now we already have a breakout of the neckline here at the 135.800 level, which further confirms that reversal pattern we just identified now. Now with the breakout of the neckline here, for those who are taking advantage of the buy position here, well done to you guys for being on standby. I have told you that there is still a tendency that price might come back to do a retest of the neckline, buy pressure below on our lower time frame to incite another wave to the upside. So if a drop happens, you don't need to be worried. It's likely going to come back to retest that structure in anticipation of another wave. Now, another thing I would like to state here is that if you had missed out on the 135.800 and price action continues to the upside, remember that we also have a bearish trend line here after connecting the series of lower highs. And if it so happens that price action breaks out of the resistant level that we have identified at the 136.00 level, which also shares a beautiful confluence with our trend line, then it will be a beautiful signal for a buy position to be triggered. So like I said, let's have a buy stop order above the 136.00 level and ensure that you can afford a stop loss at around the 135.500 level with a position above the 136.00 area. In fact, on both occasions, if price action comes back into the structure, our stop loss shouldn't exceed the previous low at the 135.400. So let's see how price action plays out going into the new week. And for those who are looking out for selling opportunities on the USDJPY, I have told you that I need a breakdown of the 135.300 level to give me a confirmation that the buying trend around this area is no longer strong. So for me to sell the USDJPY, I want to see price action take out all the buy position at the 135.300, and if possible selling pressure resumes at a rejection of that structure, it will be a beautiful opportunity to join that decline to the downside. But if this doesn't happen and price action continue to trade above the 135.800 level, then I want to feel comfortable in my buy position. And it's on this note I want to call it a day on the Extreme Speed Live. It has been a wonderful moment with you guys. I really appreciate every single one of you. as you were able to stay tuned until the end of the session. And I wish you best of luck during the New York session today. I can see some comments. I think I saw Steamroller. Okay, hello, happy newcomer, Kairu Karim. Hello, how are you? Okay, another profit day. I really like your name, really. I hope you had a wonderful session today. All right. So Steamroller, okay, great. Okay, you are welcome, Steamroller 676. All right, guys. It has been a wonderful moment. Let's continue this. Let's continue to monitor price action. I hope you've screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. Let's do this again tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all we have been monitoring in the last 24 hours and get prepared for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.